Good morning and welcome to the market forecast, fellow traders. Today is Wednesday, March the 31st, April Fool's Day tomorrow. As always, thanks for trusting me with your time. My name is John Hoagland. We're going to take a look at these markets in context through the lens of risk management. Adding another word to that today is patience. It's in the title of this morning's forecast, and I think it's vitally important for us today. Just the way the markets are looking early in the session today, I'm going to probably be looking for better trade locations as the day goes on. See everybody here today. It does this old heart good to see everybody saying good morning. And as always, we're going to be starting with the economic numbers that came out today and that are due out still. 7:15, the ADP and employment numbers came out. A little lower than they were expecting, only 517,000 added jobs instead of they were looking for 550,000. However, there was a ray of sunshine behind that. The revision from the last release of the ADP employment number was considerably higher, so a little bit of digesting to do there with that regard. 8:45 this morning Central Time, Chicago PMI due out. Probably not a very impactful number, nor will probably be the 9 o'clock pending home sales number. 9:30 Central this morning, of course, we have the EIA petroleum status report. Not much really going on in the news. Lots of folks talking about the president's speech at some point today. I haven't been able to pinpoint when that's going to be. U.S. stocks seem to be kind of holding pat. We had the Dow, I think, is the only one of the four U.S. indices that is still down on the day right now. So we're going to kind of be doing a hurry up and wait type of situation today. Now, I believe that the details of this spending bill have pretty much already been released, but it seems that there's a lot of hurry up and wait going on, waiting for the president to talk about this. If anybody knows what time that's going to be, put it in the chat. I would like to know. I haven't looked that hard to find out, but would be good to know. Also today, OPEC is meeting today to probably agree on outputs for the month of May. No changes really being expected. That OPEC recently cut demand forecast for the time being, so they're probably going to try and hold pat, keep prices pretty much where they are. If they have any real, we know they have a real preference for it, but I think $60 is a pretty decent level for them. I would much prefer to see it lower. I don't like to pay a lot at the pump, but that's the way the cookie crumbles. Crude drives. Crude prices are largely kind of flat this morning in crude, so we're going to take a look at that shortly in the charts. As always, make sure you like, share, comment, question, and feedback is always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Today, we do have the group coaching today at 1 o'clock. I'm going to put the link in so we can all join in on that. Shady Trader and Murph, I've got your questions, and we'll be addressing those in greater length than we have time for in the forecast this morning, so I'm looking forward to see that. We also have a webinar at 3 o'clock. Dan and I are going to be presenting a webinar, so there won't be a recap today, but you will be able to see our guy Dan, or at least listen to him in the webinar at 3 o'clock today. Rob T says after market close is according to Forex Factory. So, that's another reason why I think patience is going to be so important today. We're going to see the reasons why I think it's important in the charts here in just a moment. I always like to say good morning to everybody, and I always appreciate everybody coming and spending a few minutes with the old man here. Murph, good to see you. Don't forget the group coaching today. Going to be great. Love your positivity, Murph. Brian, Felix, good to see everybody. Jason, Clarence, level 2. Dad, can you give some insight on how you interpret economic releases? See the Discord for detailed questions. I don't know if I'm going to have time to get into the Discord for us today, level 2, but their economic releases, there's often an opposite reaction. When there's an economic release that's due out and everybody's expecting it to be, let's say, for example, a bullish number or a bearish number, they're going to be pretty much positioned for that already. when the number comes out and there's nobody left to buy it or sell it, we used to stand in the pit and look around. There would be crickets. We knew we were in trouble. The interpretation that I do, number one, I don't hold positions into economic numbers that I think are going to be more impactful. There's a lot of gray hairs on this head that have come from holding positions into large economic numbers. And I found that, while it has provided some wildly profitable days, it has also provided some wildly bad days. And if I add it all up, I probably came out about even over all that time. So I figure if that's the way it's going to go, why even participate? My reaction or my interpretation is in what the market does. What the market does is really what I'm looking for. Most of the time, these economic numbers, they miss. They don't hit on what actually comes out. There's always revisions. How often is like the EIA expectation way off from what actually comes out? Today they're looking for a 100,000 barrel boost. Well, we know the API had a bigger boost than that. What's going to happen in the EIA? So it's more in the reaction of the markets as to how I'm going to interpret and respond. I don't know if that helps you much, LT, but these markets are rational. It's the people behind them that are irrational. When the markets get crazy or they start to get a little bit irrational, there's your answer. It's not the markets, it's the people behind them. Steve M., good morning. James, Melanie, I haven't seen you in a while. How are you? It's great to see you. Laura, good to see you as well. Rob, Shady, Will, Tim, Nick, George, Palmetto, Smoke Pit, good morning. Trading Research, Tic Tac, or Tactic, as the case may be. Cesar, Blood Brothers Men, good morning. Mr. Shine's Mystery Channel, good to see everyone. I'm the president every morning. I wouldn't want that job if they paid me for it. JD, good to see you. The Chef, good to see you. Rob's talking about after the close, and that makes sense. Probably sometime after his nap. Angelina, Daryl, Art W, Joshua speaks at 4:20 Eastern, 3:20 Central. Excellent. Thank you, Joshua. Appreciate you guys doing that legwork for me with 100 times different rules to make you fail. I don't know what that means. Hello, Davidson. Hello, Frank Davidson. Good to see you. Ralph, good to see you. Oh, it's a scam. All right, Frank. Well, we know it's not for everybody. So, Joshua at level 2, Troy, Murph. Murph, it's a good question. I'm not sure where it's posted, but I'll see if I can't find a link for you and have it for you in group coaching today. And Nico, good morning. All right. So we're going to jump into the charts here, and hopefully if you're already in the markets, you're having a good day, of course, and we're going to talk about why I think today it is so important to remain patient. Looking first here into the daily chart here in crude oil. Okay. The volume, while we are kind of based in this range-bound activity here, is starting to fall off. It's indicating that we're probably using up all of the business that's left to do here, and a change may be coming. Open interest, a very small drop in in open interest, a very small drop again of minus 500. Range-bound can take, range-bound short time frame control maintains. The API last night announced a 3.5 million barrel boost in trading, in crude stocks, I should say. We're looking for the EIA, only looking for 100,000 barrel boost in crude. Anything can happen. Of course, that's what we were just talking about, LT. We don't know what this is going to come out, so it's going to be very hard to prepare to respond to it. I'm going to wait to see what the market does, watch the knee-jerk reaction, and then I'll see what comes after that. So lots of probably hurry up and wait in crude oil this morning, as in many of these markets. The market really just opening up, looking like we are testing towards yesterday's session low, of course. No real overnight inventory, so I wasn't going to be looking for any opportunities real quick in the morning here. Was doing the research here, we were right in the middle of value from yesterday. We're taking a look at the low from yesterday's session as well as the previous day's session. But again, with new data due out, how much are we going to be bringing new business into this market before that EIA? So I'm going to try and let this market kind of establish an early range and then work the extremes of that range. Patience. Chop zone yesterday, we were kind of right in that chop zone earlier. We're taking a look down below it. Might be an interesting opportunity for us down here, but just make sure and limit your risk. You don't want to put yourself behind the eight ball before the real opportunities come, and I believe those will be probably after the EIA petroleum status report. So really just kind of watching these lows here, see if we can find some rejection down there. We do have some degree of support in the form of structure from here and here, and the lows here. Interesting area, but again, I'm going to probably look just to be patient and wait till after the EIA comes out, unless something really changes. Into the S&Ps. All right. We got an inside day after an inside day in extended trading hours. Yesterday's extended trading hour range did not exceed the previous days, nor has the overnight for today. Like I'm saying, the markets seem to be in a kind of a hurry up and wait type of situation. So the patience that I'm kind of talking about is being kind of created by the fact that the market seems to be looking for new information. What is it waiting for? What is it waiting for? The Nasdaq is in a different situation, of course, but it's in a kind of a coiling pattern, and I believe we're in a short time frame coiling pattern here. Volume continues to somewhat fall off here. Open interest, we lost 10,000 in open interest yesterday. A lot of folks kind of sitting the sidelines for some reason. 30-minute chart. Again, really not a lot of overnight inventory as I was kind of coming into this. This morning we're still in range. We're kind of leaving value, so there's a little bit probably of some overnight longs in this market, just kind of coming into the marketplace. If we can't see this market continue higher after the U.S. Open, we may see the market kind of fall back towards settlement. That does tend to happen. Basically, we're still inside of the previous day's range and value. We have hardly left that. So really, the market is kind of telling us that there's an opportunity for us to try and stay patient, to look for better trade locations as the day goes on. We don't know what's going to happen. There could be an event, there could be a news event that could change things. We may see. We can't anticipate when longer, stronger participants are definitely going to get into this market. We're pretty far from weekly kickoff highs and lows here. These are the major levels that I'm looking for where I might see longer time frame traders really dig into this market. But, we saw some possible new longs, possibly in longer time frame. What was this? This was on Monday, Tuesday. Today is Wednesday. So on Monday we saw some buyers coming in. If you remember, we had the late spike on Friday. We found buyers at the base of the late spike. Buyers pretty much controlled the rest of the session. Buyers again back down near the base of that late spike. So, there's definitely a hint of some buying coming in. Not necessarily yesterday. Yesterday was a very whippy, choppy kind of day. And we could have kind of expected that. The market opened in range and in value. We opened in a kind of a hollow in the volume profile. We traded basically to this high volume node and almost got to the point of control, which would be the upper volume node. So, there's a million ways to skin a cat, and today, in my time frame, I'm looking for 1, 2, maybe 3 good trade locations today in the S&Ps and even in the Nasdaq. Take a look at the Nasdaq. So the Nasdaq is still continuing to coil. We're still holding this triangle formation. The market really just kind of holding here. What is it waiting for? Still range bound, still short time frame control. Coiling continues. We're getting really close to the apex of this, and when we do accept outside these trend lines, there may be a bigger move. But in the middle, again, I'm going to stress patience because we're not going anywhere. We haven't gone anywhere in 2 weeks. We're still here. The perception of value is still here. So we're going to be looking for short time frame levels with which to find our opportunities. Volume continues to kind of fall off here as we continue this coiling activity. We're running out of these price levels to facilitate trade. There will be a change, direction and timing unknown. Volume lower, open interest lower. They lost about 3,500 in the Nasdaq. We lost 10,000 in the S&Ps. Some people choosing to sit it out here. The 30-minute chart. Okay, this is the one market that I think there may be an early opportunity in, as we've got a gap. We're going to be opening with a gap to the upside. We do have some overnight longs in this market. If the buyers don't come in and continue this market higher, we may get a nice little pullback towards settlement. So a lot of it depends on what happens on the open. If we leave the opening range at the high of the session, I'm going to probably be looking for that move back down to settlement. If we leave the opening range at the low of the session, that may embolden more buyers to come into the marketplace and continue to push this market higher. This is the one market that I think there may be an earlier opportunity for us today. But again, there's nothing wrong with staying patient and letting a trade come to you. I find that if we're too aggressive too early in the session, we are seeking opportunity instead of opportunity seeking us. And if we're looking for those trades, we are going to find them, and they may not be the ones that we're looking for. So again, watch that opening range in the Nasdaq. If it offers an opportunity, be reasonable with your profit targets and get off to a good start. Here's gold. Boy, gold is holding downside structure. We've got our weekly kickoff low here that we opened below yesterday. We didn't get much of a bounce off it. What I'm really kind of looking at is this swing low here as potential support. It was supportive to a degree yesterday. It's been supportive to a degree today. This swing low, just so you know, the number is 1676.20. And what did we do as far as volume? Well, we're still kind of in rollover volume effect. It's going to be difficult to gauge the volume in the front month because it really just became the front month. However, we did only add 100 in open interest on this move to the downside, and in what would be kind of expected to be a bigger increase. If we saw selling coming in, if we saw new selling coming into this market, we would look for an increase in open interest, which just did not happen. So that makes, I think, this swing low here and basically our overnight low here highly important for us today. Take a look at the 30-minute. Okay, so there's our overnight drive up below that weekly kickoff level. What we ended up putting together yesterday was in large part a normal trading day where the first hour establishes the range for the day, and it's never extended. It can chew you up, but if you recognize that the market is range bound, you can buy below value, sell above value, and and it's a good way to limit the risk in those trades. Today, we haven't really changed the perception of value very much. Settlement is here, 1686 even. We don't really have any overnight inventory with which to look for. So I'm again going to be suggesting trying to stay patient. There's very little change in the perception of value. And it seems that this is another one of those markets that seems to be just kind of looking for new information. We just took out the overnight high here in the 730 bar, but have we found acceptance above yesterday's range in value? I would not necessarily say that that is true yet. So again, try and stay patient. That's my dog Lacey. She is saying good morning to everybody. Take a look at the euro here. Okay, so downside auction is presenting as healthy. We've had a couple of upticks in volume on the way down here. We added 39,000 in open interest on the way down yesterday. That indicates money coming into that direction. So with increasing volume and open interest, this downside auction is presenting as healthy. So I'm going to be looking for opportunities to sell strength when that opportunity presents itself. The downside structure is intact, and Lacey agrees with me. Oh, hey, let's take a look at the 30-minute chart. And here's another one of those markets that we've had some overnight longs that have reconciled back to settlement. We're inside range, inside value. Another market that screams to me, don't be too aggressive today. Be patient. Wait for something to come to you as the session kind of establishes its early range. That initial balance, that first hour of trade, might be interesting for opportunities. Let's see what else we got here. No inventory, inside value, patience. And for the 10-year, also suggesting patience. We took a good look down below that weekly kickoff low of 131 and 930 seconds. We could not close below it. We kind of did. We just barely did. 131.06 was settlement. So we just kind of settled kind of right on it or just under it. So far in our extended trading hour session, we've got an inside session. Our high is the weekly kickoff low. What once was support should become resistance to some degree. Obviously, downside structure remains. We're looking for acceptance below this level to find continuation as a high probability. Taking a look at the 30-minute chart, and Lacey, she's just mad because I'm talking to you and not to her. All right. So here's our move, weekly kickoff level, down, back to it, resistance, back basically inside the range, but kind of holding above value from yesterday. Settlement, no overnight inventory. What am I going to say about this market again? Patience. If we get a good opportunity to look for an execution up near this weekly kickoff low here, support becomes resistance, see if it works again. See if it gives us that opportunity. And it's probably one of the main hypotheses I'll be looking for in the 10-year today. The yield, last I checked, was 1.71. The VIX has been down just a little bit this morning at 1960, and the dollar index off slightly at 93.24. Still not in bad territory, though. Okay. So group coaching today, looking forward to seeing you there. I've got a couple of good questions emailed in already, and I'm looking for any questions that come in on the fly. Love these sessions, love the opportunity to talk to traders, and I learn as much from these sessions as you guys do. So looking forward to seeing you there. Rick, you're crazy. Lacey saying, buy gold today. Kevin, good to see you. Murph, patience. My worst trait. I'm not very virtuous. Yeah, it is so difficult because there's so many different signals and different time frames that offer us what we perceive as opportunities. You know, a lot of, I think, what we end up doing is we end up kind of succumbing to impulses. And impulses to me are usually going to be fear and emotionally based decisions or reactions. I don't think impulses really go through a lot of thought. We just kind of do them. And recognizing that difference is going to be crucial. And you got to have that consistent context that puts you in a position to have an assumption or a hypothesis about the market state and then trade to that market state. Yesterday in gold, that range bound regular trading hour session, normal trading day we had, if you could have put that as your hypothesis and said, okay, I'm buying below value, selling above value, stops are going to be outside of the initial balance, you could have killed it. You could have been long, short, long, short, long, short. You could have taken a lot of really decent range-bound type of trades, reversion trades. At the extreme, you go the other way, back down to point of control. You could have done that several times yesterday, but it's in the hypothesis and recognizing the type of day that you might be in. If you could assume the day type that you're going to have, it basically paints you a roadmap. So I'm going to do that, Rick. I'm going to go give Lacey a treat. Try and stay patient. I think we all over time get a better feel for when we're really sensing something intuitive versus something impulsive. So I'm looking forward to seeing everybody again at the group coaching. I'm going to find out how I can get you into the webinar today at 3:00. Murph, I'm going to write that down so I don't forget. And other than that, I'm going to take my deep breath, be ready for the equity open, which is rapidly approaching. Humble, grateful, creative, and patient today. Get out there and profit, trade well. I'll see you at 1:00 for the group coaching. Have a great day.